ENDP. Oh yeah. Yeah, it had several flags on the way up. I think someone mentioned it here, but I kind of dissed it because I thought it was already getting a little bit extended, but yeah. Great job. Great job. This is why you need to build your own conviction and not trust, rely on someone else. So important. You need to build your own conviction in these setups. Lucid dreams? Yep, lucid dreams. I have pretty decent position in this thing. Pretty decent position. Not gonna lie. Pretty decent position. Yeah. I got stopped out here when it gapped below these moving averages, but I started rebuying 3 sessions ago, I think, or 2 sessions ago, I don't remember. And on Friday I added a lot when it broke this range, this 37.90, 38 range. Do I look at any sentiment indicators? Nah, not really. Not really. The problem with sentiment indicators is during the best periods, like during the free money periods, when during the times where most of the money is made as a swing trader or a position trader, sentiment indicators and overbought, oversold indicators, they're gonna show excessively bullish sentiment versus like excessively overbought readings. So they kind of they do work, but they completely useless when there is the most amount of money to be made. That's the problem. Look at last year and early this year. If you followed these sentiment indicators, you would have missed out on life-changing money. That's the problem. But they do work sometimes. That's why people use them. Dun, dun. And there's a guy on Twitter that I follow. Actually, there's 2 guys. I don't know which one of them. Is it the Next Big Trade or Kevin Marder? But one of them said, he stopped using sentiment indicators in the 90s because he saw the same thing. When the life-changing money is to be made, the sentiment indicators will all show excessively bullish sentiment for months on end. And if you sell or get out of the market or whatever, go, take a step back during those periods, you're gonna miss out on life-changing money. And remember, on these stuff like Lucid, remember to trail. If you're in this thing, remember to, don't get too excited. Like this thing could go up another 50%. Don't just randomly sell everything into strength. It's better to sell a partial little bit too late than too early. Better to sell, 10% too late than 100% too early. I'm not saying it will double, but it can. Like the volume is just insane. This whole sector is the leading sector of the market. And the volume is just insane. Like I haven't seen this type of volume since AMC back in May, June. Look at how similar Lucid looks to AMC. Or, look at this thing. If you sold AMC here, like, oh, I got a nice move. I got a 50% move in a couple of weeks. Well, guess what? You would have gotten another 300% in the next week. I'm not saying Lucid is gonna do anything like it. Probably not, but you know, it could realistically do, you know, much bigger move than this. So don't forget the trail. Yeah, AFRM, yeah. You know, the best stocks, they won't let you in. That's, you know, they won't let you in. And I'm so pissed, man. I had this thing on the EP here, like 97, 98 bucks. I had decent size. You know, it's up 75% since, but no, it stopped me out. And then I rebought it here, like I don't know, 112, 113, something like that. And it stopped me out. And now it's in the 170s. Yay. Super easy. Now look at this. Oh, what's the growth on it? I didn't even look at numbers. 38, 39. Okay, that's decent. And look at this TTD. It's breaking a, you know, a long, like, year-long range here, and it's been building higher lows for like a year. You know, EPs are not always, but many times these EPs are where you know, a new trend starts. And today is a potential for that. It's already traded twice the average volume. It traded, like, if you look at it, the first 5 minutes or 15 minutes or whatever, 20 minutes, it traded the whole, you know, it traded average daily volume before it broke out on the 5-minute chart. So the volume was on the table before the breakout, before the opening range highs. So these are the type of EPs you're looking for. You know, preferably, you know, not always, but many times, you know, stocks that are already in an existing uptrend over the past, you know, 6 months or a year or 2 years or whatever. And then preferably they have higher lows for many months. And then they kind of break out of those big ranges on an EP. Or it could be earnings or some kind of other EP. Those are my favorite ones where the technicals and fundamentals converge. Those are the best. Stocks moving out of a base just they said have earnings happens all the time in a good market. All the time. Well, we didn't have a mania last November. And we're not having a mania now. Last November, we were just coming out of a range, and that was the start of a 4 or 3 month bull run of easy money. That was the start of 3 or 4 months of easy money, especially look at like Russell. Broke out early November and, you know, didn't top until early March. Yeah, look at where this Tesla found support. There was a guy on Twitter that says he didn't understand the logic of the moving averages. He thought, you know, technical analysis is crap. I told him, study 1,000 of the biggest stock market winners over the last 100 years, and you'll understand why I use moving averages. And, you know, who cares about the logic, really? If there's something that you will, you know, works over and over again, but you don't understand why it works, you don't pass on that, you use it, right? Because if you don't understand it, maybe no one else understands it either, right? But who cares? You go to the grocery store or you go buy a yacht, no one is gonna ask you, hey, did you understand why you bought the stock you made all this money on? No one is gonna ask you that. You have the money in the bank, no one is gonna ask you if you understood the logic behind the trade.